Cryptocurrencies have captured the attention of a new generation of investors across the globe. As we always keep up to date with our views with the latest news of cryptocurrency, so we just came with the latest news of the world of crypto. At the end of April month, shocking news came from the crypto world that Bitcoin fell more than 35% to the $60,000 level, while No Eastern Ether dropped 6% below $3,000, and Polygon lost 7% to trade at 66. However, Bitcoin tumbled 11% in April, also by noon Eastern, marking its first down month in 8 and its worst month since November 2022. While Enter falling 133%, it's the first negative month in 8 and the worst month since June 2022. Even investors are expecting more chopping trading in the next month. Bitcoin's charter BTC breakdown through the 60K technical level opens the way for another move lower to the 50K, 52K range, investment bank Standard Chartered said in emailed comments on Wednesday. Bitcoin appears to be on a trajectory at odds with the bullish predictions many investors anticipated following the network's halving on April 19th. Falling 11% in the past day to trade at $56,189 on Wednesday afternoon, according to CoinGecko data, the cryptocurrency was trading at around $64,000 on the halving date. The price has retracted by 20% since mid-March, when it hit an all-time high of $73,000. However, with the halving in the rearview and exchange-traded fund flows exhausted, this leaves Bitcoin watchers focused on macro, and the picture is cloudy at best. MicroStrategy was one of the worst-performing large-cap stocks of 2022, largely because of falling Bitcoin prices. But still, Saylor never wavered in his dedication. We all know that Saylor told CNBC last month that Bitcoin was going to eat gold.
Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold,
replacing it as the most common store of value. The latest inflation rate, as of March 31st, is 3.48%, according to the Consumer Price Index, up from 3.2% in February. This has dampened expectations that the Federal Reserve, meeting May 1st, could cut interest rates. David Lawant, the head of research at FalconX, told Fortune, "This sets up a challenging market for risk assets in general, and Bitcoin and crypto tend to follow suit." ETF flows started to slow when U.S. inflation was higher than anticipated for the second consecutive month. Since March 18th, the ETFs have seen outflows on 58% of all trading days, according to 10x Research, with $580 million in outflows since the halving. ARK Invest CEO Cathie Wood is also famous for making outlandish predictions about cryptocurrency. Her predictions, which would result in small amounts of money appreciating into millions of dollars, are unlikely to come true, but they are still interesting to consider. Wood spoke at an investor day in New York in March, noting that the price of Bitcoin could reach $3.8 million by 2030. However, the bank stated that macroeconomic variables and crypto-specific factors came to be the driving force behind the decline. At this time, Bitcoin was trading 6% lower at around $57,200 at publication time. However, according to the bank, reported withdrawals from U.S. spot Bitcoin exchange-traded funds, ETFs, have now occurred for 5 straight days, and the current price of BTC is less than the typical ETF purchase price of roughly 58 Kailers. As an analyst, Jeff Kendrick tweets, "This means that more than half of the spot ETF positions are underwater, and so the risk of liquidation of some of them must be considered as well." Analyst Austin Hilton also talks about the latest Bitcoin price prediction and recent positive news in the crypto market. Bitcoin and the overall cryptocurrency market experienced a rise, with Bitcoin gaining nearly 5% at the time of the writing. He said the critical factor contributing to this surge was the positive news about the PCE Federal Reserve report, which exceeded expectations. The report, essential for the Federal Reserve's decision-making on interest rates, showed a better-than-expected 2.9% increase compared to the anticipated 3%. This news positively impacted the crypto market, leading to a price rise. Moreover, the headlines around the Hong Kong spot ETF launch were also poor, as attention was focused on the turnover volume of $11 million rather than the net asset position of the new ETFs, which was pretty good. Even the risk assets like cryptocurrencies, which thrive on liquidity, are also facing increasing macro headwinds. It is also noted that broader liquidity measures in the U.S. have deteriorated sharply since mid-April. The bank advises purchasing Bitcoin if it reaches the 50K, 52K range, or if U.S. CPI on the 15th, a measure of inflation, is friendly. However, the cryptocurrency market didn't have a memorable April after a solid rally in the first quarter that saw Bitcoin hitting an all-time high of $73,750. The world's most popular cryptocurrency has also pulled back, and it was trading around $62,900 on April 30. If we talk about one of the major reasons behind the decline in Bitcoin price was the halving event that took place last month. As we all know, the Bitcoin halving event happens once in 4 years. However, if we talk about the April Bitcoin halving event, so there is widespread speculation that the reduction in the supply of Bitcoins, of course, will result in a scarcity-driven price increase for the digital asset in the upcoming months. Well, miners receive rewards from the Bitcoin network and transaction fees. Halving decreases the block reward by half, aiming to cap Bitcoin's global circulation at 21 million. But still, the demand for new Bitcoins increases, driving up prices. However, there are a lot of analysts who argue that because halving appears every 4 years and is anticipated, its effects are priced in and not disruptive. Miners can sell to boost cash flows, leading to large BTC transfers to exchanges as part of risk management strategies. That's also true. The ongoing volatility in the cryptocurrency market is temporary. The ongoing geopolitical issues in the Middle East between Iran and Israel are also weighing on cryptocurrency prices. As we know, cryptocurrencies are traded round the clock and globally, and they exhibit immediate and sometimes more pronounced reactions compared to stocks. This latest news will also blow your mind. As we know, crypto was one of the biggest money laundering risks in 2022-2023. Well, according to a UK government report, crypto firms were among the sectors that posed the greatest money laundering risk. Basically, the country has been trying to tackle crypto crime lately, and the police have stationed crypto tactical advisors across the country. Crypto firms, retail banking, wholesale banking, and wealth management also posed the greatest risk of being exploited for money laundering between 2022 and 2023. Now, the country has been trying to clamp down on crypto-related crime recently. The UK police said it had crypto tactical advisors stationed across the country to help seize digital assets attached to crime in October 2022. Now, the National Police Chiefs Council said they had managed to seize hundreds of millions worth of crypto from crimes. In crypto world, the latest news is roaming after the 30 April 2024 show. Kevin Danino is the founder and president of KCDPR. He discusses how companies are taking advantage of crypto's 2024 comeback. Binance founder Changpeng Zhao, who goes by CZ, was sentenced to 4 months in prison. The sentence stems from charges that his company practiced anti-money laundering activities, unlicensed money transmitting, and sanctions violations. In a letter to the judge, CZ said, "Words cannot explain how deeply I regret my choices that result in me being before the court. Rest assured that it will never happen again." Binance has also agreed to pay more than $4 billion in fines and penalties, and CZ himself has agreed to step down as CEO and will pay $200 million in fines. Blockchain startups were red hot when Katie Haun left Andreessen Horowitz in 2021 to launch her own crypto-focused venture firm. But shortly after Haun announced that Haun Ventures' 2 funds totaled $1.5 billion, cryptocurrency prices cratered and FTX collapsed. However, despite having a massive arsenal of dry powder, Haun Ventures didn't rush to scoop up stakes in crypto and Web3 on the cheap, and many observers wondered when the firm would pick up its deployment pace. While Haun Ventures says it wasn't exactly sitting on its hands and capital through crypto's downturn, the firm was perhaps more cautious than it initially intended. But now that Bitcoin prices have rebounded to their previous highs, Haun Ventures' investment activity is increasing dramatically. Including some of its token positions, The firm has made 48 investments across its early-stage $500 million and $1 billion later-stage acceleration funds, Hahn Ventures told TechCrunch. The firm's latest investment is Agora, an app that streamlines voting and other decision-making for decentralized autonomous organizations. The firm led a $5 million seed round into Agora on Tuesday, with participation from Seed Club, Coinbase Ventures, Balaji Srinivasan, and others. The process was highly fragmented. Certain decisions were made in a separate Discord channel. However, according to Rosenblum, you then go somewhere else to take a vote on allocating dollars in the treasury towards a certain project. Well, if you like this interesting video, then please give it a thumbs up. Don't forget to subscribe to our channel and hit the notification bell so that you can stay tuned for the latest updates. We'll catch you soon. Goodbye for now.